It's been tough times for people economically, but next year, unfortunately, isn't looking any better in terms of economic growth. For the first time, South Korea's finance ministry has forecast the local economy to grow less than 2%. Shin Se-byuck has the details.
1.6%. This is the finance ministry's latest 2023 economic growth forecast for South Korea. It is the first time ever that the government has set a yearly projection that's as low as the 1% range. The figure is also down by almost a percentage point compared to the estimate from 6 months earlier. And it is also lower than the outlooks from the OECD and the IMF of 1.8 and 2.0% respectively. South Korea saw its economy grow less than 2% during the 4 past major crises. In 1980, in the aftermath of the second oil crisis, 1998 during the Asian financial crisis, 2009 following the global financial crisis, and 2020 due to the COVID-19 pandemic. The grim outlook reflects a combination of headwind factors ranging from sluggish exports to lingering global economic uncertainties. Exports in particular are a key growth driver. The latest data from the Bank of Korea shows that in November, the export value index decreased by a 30-month record of over 11% due to weakening demand for chips. The import value index, meanwhile, jumped by more than 3% in November on rising oil prices. And it's only expected to get worse as the government forecasts exports to shrink 4.5% in 2023. Pundits say South Korea, heavily dependent on exports, is likely to face downside risks as long as geopolitical uncertainties such as the Ukraine war continue. An economy expert says such sluggish exports will ripple through the South Korean economy from sticker prices to interest rate hikes, eventually cutting back people's spending.
Inflation is still high and there come interest rate hikes, meaning people's real income could decrease while they have to pay more for their debt. Job growth could slow too. These will result in a drop in consumption.
Meanwhile, the finance ministry says inflation will ease somewhat from this year's 5.1% to 3.5% next year. However, it is still above the central bank's 2% target, another deteriorating factor for the economy. Shin Se-byuck, Arirang News.